Hello, trade pros. Good morning. Sound check 1, 2. I hope you guys are having a great day. I want to kick off this morning market update by saying first and foremost that I was so excited on Thursday for what we were doing. I love doing these morning market updates that I signed off saying, I'll see you tomorrow. We'll do this again. Then I forgot that Friday I was actually in the morning traveling with my family to Disney World. And I forgot to tell you that I'm going to be away. So it might have been a shocker when you were waiting at 9 a.m. and nothing happened. I do apologize. I do aim to be here every single day. And so, yeah, I forgot to remind you that I won't be there on Friday. And I was driving and I'm like, darn it. That's when I realized that because we're out the door very early. But it's probably worthwhile going through our schedule for the holidays right now for the morning market update. So the last morning market update of the year will be this Friday, December 19th. All right, I'm not planning to trade at all next week or the week after. The way the holidays are scattered throughout the calendar this year is very conducive to taking that time off completely because a lot of them are during the week. And so everything's just going to be closed, all right? So there's going to be thin market conditions, a lot of different things I want to avoid. So this Friday coming up is the last morning market update. And then January 7th, we're going to be back. The reason not January 5th, which is the Monday, is because January 6th, I'm actually traveling. January 5th, I'll still be in Toronto visiting family in Canada. And it's going to be hard to kind of do it on my laptop. I won't really have the news as much. But you can follow me on X, which is x.com/George Papazov, GeorgePapazov, or Trade Pro Academy, which is x.com/Trade Pro Academy. I'll stay up to date with you there in real time on the Monday and Tuesday, but I'll be back on January the 7th, all right, which is Wednesday at 9 a.m., all right? So that's that. January 6th, I'll be on a plane early in the morning on the way back to Florida, so I'll miss those 2 days. But we do have a little bit of break here for the morning market update. Hopefully it gives you time to miss me. They say absence makes a heart grow fonder. Here's the market snapshot for today. Equity futures are solidly higher, about 0.5% rally across the board in the U.S. It's coming on some weakness on the U.S. dollar. The 10-year yield is mostly lower as well. Gold is strong, up about 1%. Copper's bid again, 1.5% rally. And crypto's mixed, all right? So on Friday, equities, the day that I missed, I didn't even trade, were sold off pretty hard. Equities were with underperformance in Broadcom, AVGO stock down 11%. After Q4 earnings kind of missed and showing that the AI backlog fell short of expectations. So that was a big catalyst for downside. Happening right after Oracle's 4.6% drop on earnings the day before. And also reports showed that data centers for OpenAI are delayed to 2028 versus 2027 for Oracle. And it was not terrible news, but in light of what we've been seeing, it's bad timing for that news, for soft news like that. All right. Oracle then denied the reports. We got a little bit of recovery, and Friday ended up being a very down day. Looked very bearish. I missed it. Sucks because I would have gotten on that momentum for sure. I'm in my holiday sweater from Disney, by the way. I just noticed that. This is why you guys didn't have a morning market update on Friday. All right, blame Mickey. All right, so here's the week coming up of equity news. I'm going to turn around and do the trading plan, and that'll be the day at 11 a.m. today. All right, we have Fed's Moran speaking. He's a voter and he's a dove. He's speaking on CNBC at 11 a.m. All right, and he's gonna say dovish things. But considering we got a dovish cut from the Fed, he'd be an interesting person to listen for, and I think the market is gonna be interested to hear his take and opinion. All right, we also had some news overnight on Donald Trump saying there's 2 front runners, both named Kevin miraculously for the Fed position, and he said they should report to me to tell me their plans to cut rates. Something along those lines. I'm paraphrasing. All right, so that's a development as well. On Tuesday, what we're going to get is the November jobs report. So this is non-farm payrolls for November. All right, it's expected at plus 35,000. I can't wait until the new year until everything gets back to where it's supposed to be. And it's nice and neatly tied in, like this NFP jobs report is delayed. All right, but it's expected to come out at 35,000 jobs, unemployment at 4.4%. All right, and that's Tuesday. Okay, Wednesday we're gonna get U.S. retail sales expectation of slight increase, but it is the holiday season, so it'll be interesting to see how that comes through. All right, Thursday, we have the US CPI number. Like this is basically like this is all the catch-up data being dumped at the same time this week. And it comes 1 week after the Fed. Funny how that worked, right? US CPI for November and October. This is catch-up data for those 2 months. We're going to see a look at inflation. And then, if that isn't a busy enough week for you, Friday is the quad witch. And it's going to be a very high volatility day. A lot of OPEX expiries, a lot of options positions, a lot of flows will drive and whipsaw the market. So Friday is easily a skippable day. And you can begin the holidays at the end of Thursday. But this week, I'll tell you what's going to happen this week for traders. It's going to be a tougher week to trade. It's going to be a lot of whipsaws that are news driven. Every single day you have a major impact news report. They don't come out like this in the same week, but they do now for catch up. For some reason, let's just catch it all up at the end of the last month of the year, December, the month that we're expecting to get a Santa Claus rally. Let's just dump all the info for it. And Quad Witch is on Friday, by the way. And that's, like we said, it's going to be a very high volatility day. It's going to get crazy. So this is the bottom line for the trader this week. The most impactful events are Tuesday, the jobs report, Wednesday, retail sales, Thursday, the CPI, and Friday, Bank of Japan plus quad witching. Like Bank of Japan is very important and on the radar globally for a lot of more nuanced traders because Bank of Japan is literally where people borrow money to fund trades and investments worldwide. It's called the carry trade. So what happens in Bank of Japan, if borrowing costs increase, we could see a lot of deleveraging in other assets to unwind some of the carry trade as it becomes less profitable. And then the leverage becomes over leveraged suddenly. So that's important too. That's also on Friday. So we got a big week of data. All right. Get used to chop. Get used to volatility. Get used to craziness. If I wasn't here for you, to be perfectly honest with you, I would have been done last week. All right. That with the Disney trip, it would have concluded everything for the year for me. But I do want to still be here with you through some of the volatility, especially this week. Because if we could close out this week without doing a lot of damage, we end the year strong with ourselves and our performance. And we get to smile going to holidays, spend time with family we love, and direct our energy towards spending quality time with quality people, all right, and going away for the holidays on that note. But if you choose to get crazy, you could get away on the holidays on a completely different note, and it'll end the entire holiday for you, and has the opportunity to start the year on a similarly bad foot as you left. So it's your choice. Be careful. This week is going to be nuts. A lot of economic events. All you could do really is turn your focus not to capital appreciation and growth, but to capital preservation. Go to protection mode of your account, and whenever there is an opportunity, I'm not saying don't do it, do the trade, but be cautious and more cautious this week than usual because there's going to be a lot of stuff jawboning the market, a lot of stuff pushing it, pinning it, options positions, quad witch. It's going to get nuts. Okay, Santa Claus rally. Let's touch on this. Last time we're going to get to the charts. Why it matters. Well, the timing of Santa Claus rally, everyone throws around different numbers because they don't really know where it originates from. It originated from the Stock Traders Almanac, which is a book that goes back a long time that publishes stats, and they're the ones that originated this pattern and identified it first. It's the last 5 trading days of December, okay, plus the first 2 trading days of January. So it's total the last 7 trading sessions. You could hear it being defined in many other ways, but this is the definition literally from the source, from the Almanac. Why does it matter? Well, stocks tend to drift higher. It's the leave it on trade and walk away. It's called the walk away trade. You leave your positions, you don't care, you don't even check the charts, you're done, and you there's no selling, and there's some excitement buying into the year end, and also having a big fund worth $1 billion, spending $2 million to bid up the assets into the year end close to show a statement to your clients that you did good into the year end, and put a little finishing like window dressing on top of this quarterly salad to send to your clients is worth it. And this is what happens. It's called window dressing for that reason. So watch for that as well, because that also perpetuates the Santa Claus situation. Plus, liquidity's thin, volume's thin. It's easier to squeeze some more upside. So on average, S&P 500's posted 1.3 to 1.5% gains during this window. All right, and it's had positive performance roughly 75 to 80% of the time. So what are the Santa Claus Rally 2025 dates? It's Wednesday, December 24th, Friday, December 26th. All right, Monday, December 29th, and Tuesday, December 30th. Wednesday, December 31st, early close, and then Friday, January 2nd, and Monday, January 5th. Those are last 5 trading days plus the first 2 of January. That's where we're at. All right. It's too early for the Santa Claus rally quite yet. It's more of an end of the year pattern rolling into the new year. Last but not least, on the futures front today, we got some bids, some bullish bias above 68.40, a 6,900, 6,980 is a chop zone based on gamma reports, and above 7,000 we get a breakout, but we're far from it at the moment. So let's turn around, let's open up some charts. Let's do the trading plan for today, and let me see what you guys are up to. I like the sweater, says Mikey. Mikey, thank you, brother. I appreciate that. Sir, it is Disney special, and my gosh, do things add up quickly at Disney. It is not a place to go for a trader watching the bid. Thank you, though, brother. Robert, what's going on, Robbie? Will, good morning, sir. We in this together. My man, my brother, what's going on? Good morning to you as well. Let's get working today. So, on the equity chart front, okay, let's start here. First of all, we're in a bit of a consolidation. You could see that if we zoom out of this chart. In fact, let's zoom out on this chart to the left of it. Okay, we sort of got into this period of consolidation here between around the 24 to the 86. We were chopping sideways. We broke out a little, and recently we broke out a lot more, but then dumped right back into this range. So look, we're getting a volatility expansion pattern that makes it a little bit tougher to trade. So you got a higher high, you got a higher high, you got a higher high. All right, these things are very bullish in nature. You want to see the market forming higher highs, but you don't really get too excited when it's also at the same time forming lower lows, right? Because what you're seeing here is like a bell pattern that expands out volatility, and it's, for the medium term, it's harder to kind of have levels to pin off of and use for targeting and entry opportunities. And that's kind of what's making the game a little more challenging, is that we are kind of grinding our way higher, but it depends on what moments you pick to check the chart. Like, for example, overnight we're up quite a bit, but that's offset by how much we were down on Friday. All right, and Thursday we had a little bit upside. Overnight we gave up those gains. All right, Wednesday we had a lot of upside, and it's typically the pattern you need to know here on the S&P 500 is that most of the gains happen overnight in the extended trading hours, the ETH session, not the US open hours, the regular trading hours from 9:30 a.m. to 4 p.m. But that's been inversed and flipped on its head during the holidays. We are getting most of the bid on the US hours. So understanding that pattern, you kind of bake a little bit of that into your prospect for today's trading plan. So today's trading plan is this. Let's see if early morning and overnight bullish strength can hold. I don't think you're buying it as soon as the market opens. I do think we're going to get a little bit of a pullback and a sell stop run. 1 second. First, and so where do I like the levels? There's 2 levels I'm really watching. One is the 20. That's 9 points lower for a long opportunity. And the other one is down here into the 6,900 to like 06. It's a little bit of a wider zone, but down here. All right. Anything below 6,900 today is, to me, going to be slightly more bearish. That's the flip zone of bullish to bearish bias. So I am going to put that on there. My prior flip zone was 68.68, and that worked for a long period of time. But this flip zone now moves to 6,900. I could have probably just turned that yellow. That's what I'm going to do. I'm going to delete this, flip this one, turn it yellow. That's kind of like my poopy yellow color for not really knowing where it's going to be. That's the flip zone. Above here, you get some bullishness. Below there, you're kind of getting jammed towards the lower end of the range trade. And today, more than ever, I'm going to look for some order flow plays, because if I can be honest with you, from a price structure standpoint, you could see this expansion has been happening all December from November 26th. And if you draw a line here vertically, which I'm very impressed at how, well, that I screwed it up once you bring attention to it. But I drew that on the trackpad, guys. And a little bit of respect here, But yeah, a lot of this end of November rally upside in the market has run into a December expansion pattern of volatility, like getting lower lows, higher highs. It is winding up back to new highs eventually, but this is not a pattern you normally see from a price structure standpoint. And it's not a pattern that speaks confidence in the market. It's a pattern of confusion. It's a pattern of catching up missed data. It's a pattern of a Fed meeting that was super important. It's a pattern of AI bubbles, a pattern of oracles missing. It's a pattern of AVGO getting screwed, Broadcom. It's a pattern of ending the year and a lot of news catching up and a lot of volatility around single news events and worries about the AI bubble. All right, but I listened to this podcast on the weekend, and again, I heard one analyst say this, and I really like this a lot. They said that if it's good, the market has something to be afraid of. As long as the market has a few things to be afraid of, the analyst saying, I'm not afraid of the upside. And I really like that kind of contrarian view because it's good. There's things that we're afraid of, because despite being afraid of all these things, we're still managing to put in higher highs, which I think are eventually going to take us to all-time high to year end and into the Santa Claus rally. So on today's front, we stay on the long side. I would target the 53 area on the S&P. So if you get a 20-point run off of any of these pullbacks, 30-point run, look at the high 40s, low 50s, and call that a Christmas gift and be done for today. I wouldn't try to extend too much into it because you're running into resistance. All right, so that's the play. We're looking bullish. And see if we could extend upward. If we start failing and seeing some traders stuck on the short side, or stuck on the long side rather, and the paper turning bearish in the market based on order flow, I will not hesitate to take that position. Today I got 3 trades in the book ready and planned. That's all I'm going to put on, not any more shots than that. And I'm only trading until 10:30. So that's where we're at. Any questions? I know I kind of went rapid fire on you, but yeah, and I will be driving. Hey, Prashant, what's going on, brother? I'll be driving this weekend, maybe even after the trading room on Friday. I haven't decided yet, into Canada, so we might have some disturbances with that on the Friday morning market update, but I'll keep you posted. But I'm going to try to be here regardless, even if I just do a live stream somewhere. Pull over on the side of the road and give you a market update. Any questions so far? Are you trading the Z or H contract? Michael, I'm going to still go with the Z until Thursday, Wednesday to Thursday. And then I'm going to switch into the H, which is the March for 2026. But what the real thing would be, Michael, is to look at the volume before you roll over and see where the volume is highest. I think towards middle of the week, it's going to start flipping towards the H contract, and you start going to that one once volume surpasses the Z. Why am I stopping at 10:30? We in this together. I only trade until 10:30 because the system that I trade is based on order flow levels, and order flow patterns are most reliable in the window where the smart money executes, which is the first 60 minutes and the last 60 minutes. I don't like trading the close because it's more wild and less stable, and they're closing positions. But I do like to trade the open, the first hour of the open. The order flow is very strong because you're having big positions repositioning, big money moving, hedging, gamma, delta, all that hedging as well is causing the need for them to make moves, and they don't care that you could see them. Because remember, order flow could be masked. It could be, the real orders could be dark. You won't see anything, just the tip of them. But also, if you want to execute them, you kind of have to, so you don't care if people see you. And I find the first hour of the U.S. trading session is a sweet spot of order flow opportunities. And because I'm primarily order flow setup trader, I only need 1 hour. Anything after 1 hour gets less reliable, I've found personally, and I burn out mental capital, and my schedule with my kids and my family life is better that way. So yeah, for those reasons, I kind of end at 10:30 in the morning for looking actively for opportunities. Doesn't mean I close trades, but if anything's open, I get into management mode to exit the trade. I'm not looking for anything new unless there's crazy good opportunity. All right, I'm typically sharpening my skates and getting ready to go play hockey from 10:30 out the house at 11 when the trading room ends. But that's what I got. All right, Mikey, see you in the room. We in this together. I got you, brother. Thank you for the awesome questions. What are the lines? Are those value areas or some kind of heat map liquidity? The lines. Like here. These are open, high, low, and close. These are my favorite levels. So this is basically overnight high, overnight low, prior day cash flow, prior day low, prior day high, opening range 30-second and 5-minute, and the open. These are the levels that to me dictate structure more than anything else. And then my order flow chart is this one here. This is the one that I use to find the setups for imbalances. And then this is where the heat map is overlaid, sir. So you can see this is a bid that's moved up, and then these are executed trades on the chart. So it's a great question. Also, I'll end it off on this note. I got some big news coming for you early January. Stay tuned. It's gonna rock your world. Love you guys. Have a great rest of your day. I'm going to the trading room. I'll see you in there. And check us out, TradeProAcademy.com. And that's it for today. I'll see you tomorrow morning at 9 a.m. Take care. Have a great rest of your day. Goodbye.